Hello everyone, so what we're going to do now is just go over today's price action on gold and just see what sort of trades we can look at and sort of things we would be marking up and just looking at that I explain within my videos and my posts. So all know about the grey areas, all know about liquidity, and that's all we're going to use to create a trade setup, and then we will just wait for the correct timing. So on Friday we had this area labelled up as liquidity, and that is because we had this consolidation starting and it was leaving behind previous highs that wasn't really taking the previous high. So it was creating liquidity at those highs, and I think you had a near double top here. So on this move from about here, we was going into the New York session, so we was looking for bullish pressure to take this high, and we got the downwards move, and after that downwards move we was then looking for the reversal. This would be your consolidation and this would be your fake out to the downside, so you'd be looking for a reversal naturally, and that is to follow the higher time frame, which was this big grey area here. So this just shows that manipulation in this area is likely to take place because it's the true form of support and resistance on gold, and that's what we're currently following. In my previous video, we're getting that retracement now, and then we'll be looking for signs that price is going to reverse and continue up, which I'll go over in a minute. So all we do is wait for the correct time. We label up the correct areas for some sort of reversal or support in one direction. Then we trade that in the correct timing, and that will either be at the London opening or the New York session. Most of the time on the New York session is when it takes place. So that is why I mainly focus on the New York session. So going to today, let's just label up the liquidity areas first. So we can see here from this current high, we are creating liquidity at that previous high. So you would just put a line like that. And the reason for that is because if you look at these candles, you got the previous candle not being taken, so it's creating liquidity on these candles here. And then you got this one, that's the push down. This one takes the liquidity from this one but doesn't on this. So these next few candles, no liquidity has been created, so it's leaving liquidity at that previous high in the form of a rough double top there that runs along there, and then you got trend liquidity here. So that's why you just simply put a little line there to show that there is clear liquidity at that previous high, which will be targeted if we get a bullish setup over the next day or two. So that's all you'd do there. Going on today's setup, which is obviously the bullish one, you have this retracement price action. So you have the weekly opening here, pushed up, and then it's slowly retraced. When you get price action like that, it's creating liquidity too. This isn't the clearest liquidity, but you can see how it's doing it. So it's slowly retracing, and each time it does that, it takes liquidity below, but it leaves liquidity above. This downwards drop here collects this liquidity and creates liquidity above. So what you'd have is you would be layering up on liquidity above the target. Then it comes into a key time. So this is the London Open here. It opens and pushes down, takes liquidity from here and here. Then you get a reversal to the upside. So that is your London opening buy setup, and this you would be targeting this liquidity here at least. If you zoom out a bit, you can see the reason why we're getting a move up from here is because this is your higher time frame concentrated area, and that's within the higher time frame grey area. So we are in a manipulation area. This is your consolidation. This is your fake out down that happened last week in the New York session. So this would be seen as an impulse move, especially as it went above this consolidation area. So now you'd be looking for a retracement and this to be used as bullish support. That's why when it came down, the London opening retest this area once again, and you got manipulation being shown in that area. So entry here would be on this candle or no later than the start of this candle here. You could have got that retracement there because it's retesting this area and it hasn't taken all of this liquidity. So this high and this high is a rough double top. So then you would have liquidity sitting there like that. So here you would have entries around here on these few candles, and your stop loss would go at the low, and you'd be targeting a move up, mainly to target the top of this candle here because it's the top of that liquidity pool. Price moves up, just about takes it on this candle here, retrace a little bit, support resistance, then continues towards the upside. So that is the main move there, and that was shown at the London opening. So that's that, and that's towards the upside. And what you'd be doing there is you wouldn't really be focusing on much else. You would be going to the higher time frame and just looking to the left. And as we saw last week, we labelled this area up as clear liquidity, and you have support and resistance with these previous lows running along there. So you'd be aiming for this level, which it reversed at. So that would be your main target on that small time frame move. So next you would go down to the smaller time frame. So let's say 15-minute time frame. So what we're doing now is creating more liquidity, and we have this liquidity being created. So here you can just see it is clear upwards trend liquidity. Most of the candles don't take the previous low. This is the first candle that does a sweep of the previous candle. So if you go down to the smaller time frame, this would be your consolidation, this would be your fake out down, and then your impulse move up. So on the smaller time frame, this area running along here, which you're currently getting a reaction from, is your smaller time frame manipulation area. If you go down to the 1 minute time frame, you can see that that's your consolidation, that's your fake out down, and then this is your impulse move up. And let's just see what time that does done. So that was done around the New York, in the New York session, first half. So that's why there's power within that move. So this could easily continue towards the upside and target that one there. So you would label that up as clear liquidity. You have a bullish support, so this can continue up, like I said, and take that high. And then we will look for that reversal tomorrow. But all we're doing now is labeling up clear liquidity, looking for potential bullish support areas, and producing a trade using those manipulation areas, liquidity that is clear and uncollected, and timing. So this move here, let's just focus on this one. So if you was looking for a bullish move here, you wouldn't really take it because the timing is wrong. You have liquidity, you have a bullish support to produce a buy or sell trade. In this case, it's a buy trade, but the timing is wrong. Currently in the UK, it's 8 p.m, so the volume will be starting to decrease on gold. So you're not likely to get that full move. If it does happen, it will happen through the Asian session. What I like to do, as you all know by now, is focus on the New York session because that is where the main setups are. And if you see a confirmation within that time, it's normally a true confirmation, and it's being shown to keep price in one direction. So you're more likely to get a successful trade setup if you spot it within that high volume time. Alright, what else do I need to go over? There's not really much else to go over. Try not to overthink things too much, because all you got to do is just go to the higher time frame, label up your liquidity and your key areas around price. So these grey manipulation areas, then just produce a kind of path like I've done here on where you expect the price to go. Then you come on the charts, have a little look at the London Open, and then mainly focus on the New York session, and you should be able to get some good setups on gold. Hope that helps. That's how I look at the charts. They're the three main things I use. I try and keep it as simple as possible. If you try and get a smaller time frame move, so let's say you're a scalper, I would look at the higher time frame, look for a main confirmation in one direction, then you can go to the smaller time frame and just look at those smaller time frame manipulation areas and just watch how price uses those and the liquidity grabs as your support and resistance. A bit like here, you've got the consolidation, you got the fake out that done the liquidity grab, then you got your impulse move up. So then you would label this area up as your consolidation area like that, and you can see how it retested that there. So this is the same as what I just explained on the higher time frame. This is your consolidation, fake out, impulse move, retrace, retest in that area, followed by a continuation up. Now if you go to the higher time frame, this is your consolidation, fake out, impulse move up, and now we're looking for that retest followed by a continuation up. It's exactly the same, it's just done on different time frames because of the different volume you see on the chart, different volume amounts. Hope that helps, and I'll be back again on tomorrow, London Open. I'll post again then, and we can give a update on what we expect, but still expecting that retracement, and then tomorrow we'll be looking for the buy once again. Take care.